Let's have a look at the Chinese stocks, please. Most of them are down again. They had a bad day yesterday, down again this morning. This is, of course, in the wake of the report that Evergrande, the Chinese property developer, second largest in China, could be forced into bankruptcy. Not sure about that, though, but China stocks are down. And look who's here, Gregg Smith, who says the dramatic statement, never buy Chinese stocks again. That is your statement. Make your case.
Hey, good morning, Stuart. Hey, quick, happy 89th birthday to my father, Elliot. Big fan of the show, and he's watching this morning.
All right.
But look, at the closing bell yesterday, all investors had the same question. Why did the market go down yesterday? Many pointed at China, some pointed at the Fed meeting, others pointed at a government shutdown. And I have a really simple answer for you that I don't think you're going to like. But when I began my career on Wall Street more than 30 years ago, I had the privilege of working under the legendary Ace Greenberg at Bear Stearns. And when Ace was asked about the market crash of 1987, his very simple answer was, there were more sellers today than buyers, and stocks are volatile. So with that being said, I think China is coming to the forefront. We've seen a lot of activity out of China, and we're witnessing a cataclysmic sea change in what's happening there as we now enter a new phase in which we see China clamping down on their great capitalism and entrepreneurship experiment. We're seeing a lot of pain go to companies, not just the big companies like Alibaba. We've seen what's happened with Ant and Didi and Baidu. But I think U.S. investors have to give very careful thought as to how this might impact U.S. companies here that have great exposure to the Chinese consumer. And I'm talking about iconic names, even like Nike, Starbucks, and even Apple that you talked about, with Chinese consumers going out and buying their products. So if China continues on this path, which I very much think they will, how is that going to impact not just, again, the Chinese companies, but even U.S. issuers and U.S. companies?
Well, obviously, it's something to watch out for. Yeah, that's not going away. Watch out for that. That's for sure. I want to talk to you about Archer, the electric plane taxi guys. I'm not sure how to put that into a neat seminar. I think
flying taxis.
Flying taxis. Thank you very much. Electric flying taxis. Okay. You invested in them, I think, but they went public last Friday. They had a bad day last Friday. They had a bad day yesterday. How come they're not doing well so far?
Look, I think Archer is an incredible company with great leadership. They're fully funded. They have a great fundamental investor base. Look, this is a moonshot investment. I have ownership in the company. I would not over allocate to this name. I think this is a great investment that I think can yield outsized returns in the next several years. We are going to be witnessing their electric aircraft hopefully taken to the skies over Los Angeles and Miami in the next several years. And it's a long-term story. So I don't get concerned by the day-to-day change.
It's a moonshot and you're in it. Okay.
It's a moonshot. I'm in it, and it'll produce outsized returns if this works well.
All right, Greg, we'll follow it. Gregg Smith, thanks very much, sir. See you again soon. Got it?
Thank you.